Good morning, everyone. Jesse Webb, TradersPro. Markets have a little bit of weakness here in this current trend. Let's talk about that today. We two things to review. Excuse me. Is we've talked about, and we will talk about these each day. Is this long term downtrend, which has been bottoming out right here, is just doing that. It's trying to bottom out, potentially trying to work itself back up. We're going to have a lot of ups and downs along the way, obviously, in trying to churn out a bottom right here. And market conditions have currently just turned mildly bearish back in this bear market. And again, we're still in a bear market, so we just have to be aware that we have that real strong downtrend intact and not get too anxious about jumping back in, picking and choosing the individual trades that we're looking at, the direction, the sector. We want to be trading what's leading currently and not aggressively, not really big, heavy positions, maybe half position sizes with tighter stop losses. In this case, we're looking for possible bearish bias, raising stop levels on winners and selling any losers. When you're picking apart a portfolio, the best idea is to get rid of what is not working, get rid of what is losing. A lot of people will try and add into their losers because they feel like it's a depressed price and they can add in at a lower price. In a real long-term investment, maybe that will work, or in a real diversified type of strategy with ETFs and mutual funds, or even long-term accounts like 401ks and IRAs, adding in these conditions and you have a long time horizon certainly works. But in terms of trading shorter term, being a little bit more nimble, making sure that your capital is preserved is in a bear market is the first and foremost thing to be paying attention to. So that being said, we need to be a little bit cautious right here. We have just a few things that may be popping up. One is we are at the upper end of this range of this shorter term trend that's been moving higher, and it looks very counter trendy potentially here to this being the trend direction, and then counter trend to that. There could be more downside to come here. The momentum has shifted back into this range bound. Breadth is working its way back. Sentiment is still pretty extreme. So again, not real, just a few little cracks. Those are a few little potential insights that the trend may be starting to shift. This is also another one here with divergence and working its way back to equilibrium with a buy-sell ratio of 1. Now, that potentially could cross back over again. If that's the case, then that'll shift us back into a bearish condition in a bear market, and we're going to want to, again, manage our risk accordingly. It's all about managing risk so that we are not holding on to losers or adding into losers. We're either in cash or we're in something that is working. Okay, so SPY, we talked about this yesterday. It actually has moved back again into this hold range here. Kind of some bullish action, though. That price bar yesterday looked a little bit more bullish, where it had a little bit of that candlestick tail, that wick on the bottom there, where it bounced, moved lower, bounced higher. Futures are up slightly this morning, but not by much. And we do have this support area right here. So again, it's just a little bit of things have changed up here. This is what a little bit more of a messy trend profile looks like. We want to see it all typically all green, right? And the signal green, and the short term and the long term all green. Well, that's not the case right now on S&P. We've got the long-term downtrend, short-term trend is now shifted, and now we're back into this hold and some support areas right there. So again, that's why the shift back to mildly bearish in a bear market status at this point. That being said, there are always going to be a handful of stocks that are working. That's the muscle stocks group, the new buys that are heading higher than that muscle stocks group that is kind of that core group that's moving higher. And as it's moving higher, any pullbacks you can add into those. Those are the leaders currently, and those are the ones that you want to be focusing on. This very top stock right here, this actually is one to look at today. Ticker on it is NINE. It's going to be a kind of a high risk type stock because it's already had a pretty decent move, but you can see what it's done now. It's topped out, it's had a pretty decent retracement, and then it's stabilizing, and then now it's had one confirmation day. So it's got this trend profile set up right here. It's also got some decent looking fundamentals with in terms of earning per share. Things are growing. That's probably part of the catalyst why it is moving so well. Is the company is probably doing well. I don't know for sure other than just that quick glance right there, but that's one to be looking at that has a risk profile set up now where you've got a retracement pullback into the buy zone, and you've got a new confirmation bar and some support, 1, 2, 3, 4, 5 days of support. So you could set a stop loss right below that, and then that creates the setup. If it continues higher, it's a great trade. If it continues lower, you know that you need to be out of the trade below these lows right here, below these candlestick tails, because it's probably going to continue to drop lower. So in terms of that potential opportunity for the day, it's also in that oil sector, which is still continuing to do well. If you don't have full access to the TradersPro software, please give us a try. There's a link below that you can just click on and get you signed up. You've got 30-day to be able to review it, 30-day money-back guarantee, no questions asked, but I know you're going to want to stick around with us. So we look forward to having you. Have a great trading day.